The index fund indexes to the market capitalization, which is just like the value of each company. And that means the bigger a company is, the more total stock value it has out in the world, the bigger it has of like a slice of your pie. No one's trying to outsmart the market here. The fund is just riding the market.
Yeah, this is how it's worked, by the way, since the S&P 500 index funds have been created. And overall, when you look at the S&P 500 top 10 companies over time, the top 10 really account for more than like 90% of the growth in the S&P 500. It's actually really staggering. So that's why they do it this way. It's weighted so that the largest companies who are doing the best have the most exposure within the index fund, and as a result of that, you get higher returns. And those top 10 companies aren't always going to be the top 10 companies. Like you could see over time, it changes. Like the biggest companies within the S&P 500 30 years ago are for the most part completely different from what we see today. And that's done on purpose because companies on top don't always stay on top. And you want to be invested in companies as they rise, as they grow, and that's why it's done this way.
But I do invest some of my money personally, and one thing that I found in doing that is that I worry about it all the time. Like I worry if what I've chosen to do has under or overperformed the S&P 500, and it's been like both. Like it's been way above it and it's been way below it. It's like so volatile compared to just buying the market and waiting.
Here's the thing how you have to view it though, is that you have to look at risk-adjusted returns. You can't just look at like, oh, this underperformed and therefore it's bad. You have to say, okay, how much risk did I take to get that investment? Because there's a huge difference between I could make 50% of my money this year, but risk losing all of it, or I could take a guaranteed 6% return with no risk whatsoever. So you have to weigh the volatility and risk of losing everything with the expected return over the long run. And for the most part, I'm okay getting a lower return if that means overall it's probably going to be a lot safer than something else that'll get a higher return. So not all investments are created equally.